few years, which may start to come back. Prakash Diwan is with us, market expert, to talk about market fundamentals and how he sees things, and a lot to discuss. Prakash, morning. ICICI and Kotak, right? I mean, actually more ICICI than Kotak, because Kotak is underperformed. ICICI is not underperformed, but it's not done as well relative to all the beats we've seen for so many quarters now. Numbers, no problems. But there has been FII selling, right? And that is, even though upgrades have come in thick and fast after every earnings said, stocks have really not gone anywhere for the last few quarters. What's your sense? You think, this time will be, numbers are solid, no problem, but what happens to the stocks from here, both ICICI and Kotak?
Good morning, Prashant. That's right. I think there are two factors that you need to put in context to explain why ICICI and Kotak have both lagged in terms of performance relative to even some of the private sector names like Axis, for instance. Yeah. The first is that the market's love for PSU banks certainly has been center stage. All the allocations into the BFSI side which have come in the last 2 quarters actually have been thanks to the revival in performance from these PSU banks, including of course the smaller ones, not just restricting itself to the SBIs, Canara banks, BOBs of the world. The second factor is that the FI exits have been much more weighted. So wherever you had weightages, and after the HDFC Bank went into that pause of sorts, HDFC Bank has been in a pause mode for almost a year now, and till the merger is kind of out of the way and there's clarity, and now it seems like getting closer to that stage. There's nothing much in terms of option but to get out of these two banks if you had to exit ETFs particularly. So that was the other reason. But if you look at the numbers which came throughout the weekend, very clearly Kotak has made a comeback of sorts. I mean, after so many quarters, they've seen a little bit of expansion in their names. They're coming back to what always used to attract premium valuations. 4 times book was a very common thing for Kotak along with HDFC, whereas ICICI would still kind of be good enough in that 2.8, 2.93 times price to book. So that was the reason why Kotak was getting punished, because it didn't have numbers very consistently. But finally, I think they seem to be getting it right. But they're extremely cagey about still expanding the book, from what I hear from the market, and that's one of the reasons why you may not see very clear growth that's very decisive of sorts. And that was the reason why the market didn't somehow like that. Whereas ICICI has, of course, been galloping ahead with so many other things. Some of parts also kind of favors it, given the businesses that it has. Some of them still remain unlisted. So I think precisely what's going to happen is you will see a comeback for both these banks at some point in time when the entire private sector bank basket gets re-rated. But you'll still have to, they would have to wait before the Axis and the HDFCs also start coming back. So it's going to be a positive rub-off on the other banks. But I don't think this is just going to be good enough for them to play catch-up on all that lost ground.
Okay, we also have to talk, of course, about Reliance Industries, right, Prakash? That was the other big number that came through.
Yeah.
I do know your view on that, so I'm just going to, make you wait a tad bit, because we have 2 more guests joining in. Probal Sen, Energy Analyst at ICICI Securities, and Balaji Subramaniam, the Vice President at IIFL Securities, join us now to tell us how to approach